Talking about the Q3 numbers, let's connect with Madhu Alexiouse, for the CEO of Muthoot Capital. Thanks so much, Madhu, for joining in on ET Now. A 48% growth in profits. Undoubtedly, it's been a robust third quarter. Net spreads have improved. AUM growth has been positive. But I want to talk about first from profit and loss account point of view, the PAT growth and the NII growth. So what led to this robust growth over there? And can you discuss the drivers in the quarter gone by?
Yeah, good morning. Before coming to what actually had driven the business, it's very important to really look back what kind of headwinds that had impacted NBFC sector. I think Muthoot Capital, starting from Q2 with the impact of Kerala floods, followed by the liquidity crisis. Then there was an impact on insurance costs. There was a huge escalation after the Supreme Court orders. So there was tremendous pressure on two-wheeler sales. Despite that, Muthoot Capital has been able to deliver excellent set of numbers. We've been telling how we've been expanding across the country. One of the driving force for Muthoot Capital had been spreading across the geography of this country. We are now present in almost 20 states. Our processes were driven by digitalization, which had very good impact on reducing our OPEX. OPEX to NII has been compared to last year has come down by 10%, which is a very excellent contributor to our bottom line. Besides that, we have a unique business model where our flagship company, that is Muthoot FinCorp Limited, has got about 3,600 plus branches who cross-sell two-wheeler and contribute business to us at a very low cost. So given all these factors, last many quarters we've been showing consistent growth in AUM, consistent growth in PAT, and of course, given the headwinds that were there in the Q2 and Q3, we have been able to deliver an excellent set of numbers. PAT has grown 99% compared to last year 9 months if you compare that. So excellent set of numbers there in front of you.
Okay, I just want to also talk about an internal, and that is with respect to the net spreads. Yes, there has been improvement over there as well, like you as well flagged off. But we are seeing cost of funds rise. So do you think that this improvement will continue going forward as well?
It's very important to look this problem from a different angle. Every quarter we collect more than 450 plus crores through our collections itself. So any kind of short-term shocks, we are actually prepared to face that, and that's one of the reasons why we were not impacted much as far as Q3 is concerned, despite industry, NBFCs getting impacted and a lot of players also moving out of the market. We have some impact on the cost of funds, but overall, what I said is that we've been able to manage our OPEX well. We've been able to grow in areas where we were able to generate more profitable business. So we were very selective in where we'll do business, what kind of business we'll do. We were very cautious because a lot of players vacated the market. We were very cautious in our lending. Instead of going after market shares, we looked at portfolio quality of business. So cost of funds has impact, but we've been able to factor in various other savings whereby we've been able to show the net spread. Portfolio quality is also something which we have improved after the Kerala flood. So we have a very stable NPA right now, and going forward we would further improve on that.
Okay. I just also want to know about the impact of the recent RBI relaxation norms on SME, MSMEs for Muthoot Capital. And is there any sort of focus, I'm just going to roll in two questions in one, but is there any sort of focus on inorganic growth? I mean, any branch expansion plans that you could also talk to us about?
In fact, Muthoot Capital's focus is more on small ticket loans. And we focus mainly on two-wheelers currently, and we intend to expand into used cars and consumer durables. So currently we are not there in SME and MSME, and we don't have plans to enter that. Our flagship company, that is Muthoot FinCorp Limited, does that product. So as of now, as far as Muthoot Capital is concerned, our next product line, whatever we are going to introduce, is on used cars and consumer durables.
Okay, I'm going to squeeze in one more question, and that's on AUMs. It has been strong, but there has been a 7% fall in disbursements on a sequential basis. So if you could talk to us about the outlook on AUM growth and what segments would be the focus, among two-wheelers, three-wheelers, CVs, business loans?
So AUM 9 months we have grown by about 31%. We would continue to grow better than the industry. Two-wheeler industry is expected to grow by 8 to 10%. That is what we are looking at. We'll definitely grow much better than that. In fact, disbursement would be much better than that. In terms of the next year that 2020 that we had projected, we had said that about 4,000 crore is the AUM that we will build. So if you want a flavor of next year, it's about 4,000 crore that we have planned, and that would come not only from two-wheelers but also the new products that we are going to launch, that is in the form of second-hand cars and consumer durables. So everything taken together, this is what we look at as we close to 2020.
All right, fair enough. Thanks so much then, Madhu, for joining in on ET Now, helping us understand what transpired in the third quarter. It's been a good set, for Muthoot. Muthoot, undoubtedly, profit growth as well as NII growth has been pretty strong. Fresh slippages as well actually have declined sequentially. Unfortunately, we're a bit out of time, so I was not able to ask the question on slippages. But yeah, slippages too have declined at 26.7 crore versus a little over 30 crore on a sequential basis. But